Hi, this is Jim Hierchek. I'm the technical analyst with Autochartist, and today we're going to talk about the program to trade and to search for U.S. stock opportunities. It's a very good program for finding hidden opportunities, hidden patterns that may not show up or using conventional chart patterns or chart programs, and it's a very quick and easy way to find these good opportunities. We can look at anything from a 15-minute all the way down to up to a 1,440-minute chart pattern. So there's plenty of opportunities, and I just want to start out by saying that besides these webinars, we also produce a program called Market Watch, where I put out a chart that I like for the day on YouTube, and you can look at videos on YouTube to look at how I analyze the markets, and that includes forex, equities, commodities, and the indice markets. Now, the first thing that I want to say is that this is for educational purposes, and there is risk involved in trading. So make sure that you understand the way the markets work and you're well capitalized in using risk capital. Now, one thing that I'd like to do is I like to take Autochartist and do what I call a top-down approach. And I start with the indices, and I want to look at, for example, the S&P 500, and I want to get an idea what the big picture is. Some people call it the dog and the tail theory. So if the dog is the S&P and the stocks are the tail, I want to know what this dog is doing. Unless the stock is involved in some kind of a news event or maybe a stock of the day. For example, Google today is going to release its earnings, so it may have a pattern that's completely different from the main index. But I want to know what the market's doing. So I want to flip up my index, and I can see that the S&P broke a support line a couple of days ago, and it was indicating that there's a strong bias to the downside. In addition, you can see this series of lower candlesticks pointing to the downside. And all of these things are telling me that this market is bearish. Now, sure, it did hesitate a little bit in here, but that's normal given the size of this kind of break. And when this occurs, you have to expect, well, maybe the market's going to retrace, but it may not necessarily change the trend. But in this case, it's clearly defined downtrend. It broke the support, and there's a pretty far off target. So now that I have my bias, or how I want to approach the market based on the bigger picture, I start to look at individual stocks. And we can look at stocks based on the entire New York Stock Exchange, all the symbols. We can look at the NASDAQ stocks, and we can also look at the Amex stocks. Now, from a liquidity standpoint and volatility standpoint, I tend to look at mostly the New York stocks, New York Stock Exchange stocks, and the NASDAQ stocks. From looking at the New York stock, you see that we have quite a few examples that can come up. And what you want to do is be familiar with the names of these stocks and familiar with the symbols. When you're trading New York stocks, you get 3 symbols. When you trade the NASDAQ stocks, you get 4 symbols. So if you are using an outside source to kind of give you an idea of what stocks to watch, and you're trying to find these chart patterns on Autochartist, gives you an idea of what exchange they're trading on based on the number of letters in the symbol. Now, another thing that I do is that I've created a group here in the searches where I've put in the 30 Dow stocks. And the reason why I do that is because I know the characteristics of the Dow stocks. I know that they're actively traded. They have very high volume relative to large groups, some of the other stocks. And they also have a reasonable amount of volatility. And that gives me an idea of how the markets can trade. And so it are also familiar names. And the other thing is that if I have a bias, for example, in the Dow Jones index itself, I will look for stocks that are also trading with a similar bias. So, for example, I'm looking at a down move today because the S&P is pointed lower. and based on a couple of the break a couple of days ago. So I'm looking for markets that are either emerging or completed that are showing downside potential. So the first one that comes up today is Merck stock, Merck & Company. Okay, so what this is showing me on a triangle formation is that I could get a downside break in this market because it's an emerging pattern. I could be looking at a break through the support area. Sorry about that there. And so if I have a bias to the downside and I can see all this red here, I know that the stock also is pointing to the downside. Now, if you remember in the S&P pattern, we had a breakthrough support, but in this one we haven't broken through support yet. So again, that makes it an emerging pattern. But once I can identify where the area is or where the market can break, I can trade it two ways. I can sell the market in anticipation of a break through the support, or I can put the stock on a list of stocks that have the potential to break down and not act upon this market until we actually break through support. But the main thing I want to do is I want to create an opportunity or a list of stocks that are trading with the same bias as the big picture. Okay, hold on 1 second there. Okay, so what I'm looking for here is when I look through my search list, I want to look for stocks that have red arrows. For example, the next one here is from yesterday. It's a 1400 40-minute chart, and it's a DuPont stock. Okay, it's also listed in the Dow. You can see that this pattern is very similar to the S&P pattern. We had a sell-off, we broke through support, and we had this consolidation yesterday. But there's still a bias to the downside, and Autochartist is indicating that there's still plenty of room. It's almost a $5 break. This says potential to break almost $5. So this is one stock that is definitely on the radar. And as I said before with the S&P, that sometimes when you have a prolonged move down and you break through support, it may not move right away because there's other factors such as 5-minute, 15-minute, hourly charts, things like that, that are creating a oversold condition. So what you should do in this case is if the market doesn't break immediately, you should start looking for an area that it could retrace back to. And it could be 50% of this high to this low, or it could be from this high down to this low. And at least keep that in mind, that if the momentum slows and the market doesn't work its way down quickly, that you could sit back and wait for it to retrace. And since the main trend is down, you could look for shorting opportunities in the direction of the main trend. So again, these patterns are going to either give you a solid breakthrough and a continuation, and that's based on more heavy volatility or more rising volume to the downside. But if you don't get the rising volume and you get a slowdown in the volatility, then the pattern will rest before resuming the trend. So if you're an experienced trader, you know that even with the best signal, minutes or so before the U.S. markets open, and you have to look at what these indices are doing before the stocks open. So now I know before my trading day begins that I have the main index down on a 1440-minute chart, and I also have this 30-minute chart down just 30 minutes before the opening. So now, again, I'm going to go back to my my intraday stock list, and I'm going to look for stocks that have a bias to the downside. So I have DuPont as one of them. I also have in the NASDAQ market Intel. This is an emerging pattern. Okay. Now once I get the bias that I want, I look for a chart pattern that gives me that kind of bias, or it's something that indicates there's going to be movement. And you can see that although this is a rising wedge pattern, that it has characteristics like a triangle. So the more narrow this support and resistance area gets, the more likely the market's going to break out. So in this case, I don't expect it to bounce off support, but I expect it to feel some kind of selling pressure and eventually take out the support line. Okay, so I not only do I want to know the bias of the market based on the big index, and I want to find stocks that are in it trading in the same direction as that bias. I want to find a chart pattern that puts me in a position to take advantage of that bias. So if I run it again, and I'm looking for now intraday signals that are going to be pointing to the downside, I have DuPont and I have Intel as two possible stocks that are trading with the same bias that I'm looking for. Now as I scan down the list, I can see that I also have Pfizer, and that's on a daily chart basis. Okay, this stock too is showing me that it has completed its pattern of this rising wedge, and all it's waiting for is momentum and rising volume to drive this price lower. So this is another candidate that tipped me off a few days ago, and now after one day of consolidation looks like it's ready to resume the trend. All right, now going through the list, I can see that we also have a potential bearish pattern in Travelers or Coca-Cola. Here's a pattern from Coca-Cola. This is an emerging pattern. You can see that we just had a top. At the same time the S&P was breaking, this market was just finishing its top and starting to break to the downside. So as a trader, I can see that I have potential to take a market short in the middle of this move, and there's still downside potential before the support point hits. And again, it's keeping with the theme of knowing what the main index is doing, the direction of the main index, and then trying to find stocks that are either emerging or completed that are trading in that particular direction. Now, if you are a counter trend trader, if you're a type of trader that likes to trade opposite, or maybe you want to pick bottoms when the market's going down or pick tops when the market's going up, then you can look for your counter trend buying opportunities. I'm not going to tell you to avoid those, but at the same time you have to understand that there's different kinds of risk parameters when you're trading with the trend and when you're trading against the trend. Another thing that I do is I also look at the market at various times. Here's like NASDAQ, for example, on a 240-minute chart. And so if I'm going to, or I should say not NASDAQ, but these are just stocks that are on a 240-minute chart. So Merck, for example, was giving me a bias to the downside on the daily, and now seeing that I also have this bias developing on the on a 240-minute chart. So not only can I go from index to stock, from top-down index to stock, but I can also start with a daily or a 1440-minute time period, pick up the trend. Then I can also go down to 240. And so eventually what I want to do is try to walk down these time periods so that I go from the biggest time period to the smallest, so that when I do execute a trade, I'm doing it on my smallest time period, and that is helping me lower the risk a little bit. So at this point, our 15 minutes is up, and I've talked about what I wanted to do. And again, to recap, again, start with the index to get the theme of the day. Okay, you can also look at the currencies if you want to determine whether it's a risk-on day, and that means that the dollars are usually weak and that all the other currencies are stronger. Those will give you a bias. You want to maybe look at some of the foreign indices to find out if they're under pressure. And then once you get that big picture, then move to the individual stocks and start with the daily stock chart and work your way down to the smallest time period that you like to trade. And see if you can get everything lined up so that you're limiting your risks and you're trading with the trend. Okay, I'm going to open up the webinar to some questions now, and see if I can get some questions for you. Bear with me a second while I open up my